Hello, everybody. It's Rombo here, and glad to be back and putting out another video here. I know it's late, so I'll try to be quick. I know that kind of sounds impossible for me, but let's do it. DPLS had a nice little rebound today. I was kind of disappointed in that. I was kind of hoping it would continue down. It still could. I would like to see a 50% retracement to have a nice rest in order for it to go up. So we'll wait and see. It could still happen the next couple of days. If it continues to go upward, it was less than 38%. So I wouldn't be too surprised to see it not have too much more of a pop before we get a decent, a really decent pullback on DPLS. But it's still looking really strong. It's well above the 25 EMA here. The EMA is now going up. That's what you want to see when you want to go long. When the major down, moving averages that you use, the major ones, the longer ones, when they're going down, you want to stay away from the stock. You really do. You don't want to be the first mouse. The second mouse gets the cheese. You mess around with underneath the downtrend line here. You might have a little quick dip up and then comes back down, just like right here. It came down. This is why I got excited about DPLS, because this is on the yearly chart from the absolute high all the way down. It broke through it, which means it's not an uptrend, but it's starting to stage one. In stage one, now we have a higher high, okay? And now hopefully we'll have a higher low. It will finish higher, higher than here. And then we'll be off to the races, starting to stage two, which is an uptrend. Next is Bark, lovely Bark. It is doing really well. Here's the deviation lines. These are superimposed weekly deviations, and if you notice, they're starting to pinch a little bit. Which is a sign of a squeeze. It's not in a squeeze, but it did cross the downtrend here. I got in at 237. We're at 261 right here. Still below the money line here. I call it the money line. It's the anchored VWAP, anchored to the candle with the highest volume. Usually when we get above that, and then we take a bounce and bounce off it, it really runs. Like right here, it came, but it got rejected, came up again. Had a little bounce right here. Some guys probably would have gotten in, and then they got faked out. So we want to see a nice big run up and a bounce, either on it or just above it, and then kicking in. So coming from the longer charts, I do have price targets here of 451, 605, 756, and 912. Just because I put those price targets on there doesn't mean that's where I think it's going to go. Okay, it might just go to 451 and then fizzle out, because it could get rejected off here. And going by the deviations on the daily chart, 374 is a lot to be expected. It did have a history of getting rejected right off the just under the 2.5 deviation, and that's where we're at right here. So this will be a big area of concern, but if we break that and get into this third sigma area, then I think we could have a big run. So it depends on whether it goes by the statistics and the deviations, or the horizontal, or some combination of that, or we could just be playing it from the weekly deviations here. This is the fourth deviation on the weekly, so it definitely has the ability to get up to the 451 area. STBX probably looks better from the 4-hour chart. There we go. Okay, so we set kind of a standard resistance here at around 1891 or so. Now we came down to it and got rejected here. So I use this for the bottom of the consolidation area. Usually it will dip below, it will come back above, and then it likes to stay in this. This is a range. Here we broke above it, came back down, broke below it, came back up, broke below it, came back up. Now we came down below it, and I got back in. So we'll see what happens here. I think I got in right on the top right here, but I'm still in the lower part of this consolidation. So I think now we had a dip down. Yeah, I averaged down when it broke here, and now I'm waiting for a pullback to come up somewhere in this middle range here. It could come all the way back up and test 1886, and then come back down, and we'll just be ranging for a while. Or because it's new, we definitely could have another big run up. There's always a chance that it will continue downward. There's always a chance it will break through, but we'll wait and see with that one. HSDT had, let's see, we're down 5.9%. Here's the weekly deviations, and look how they're starting to pinch. Does that mean it's a squeeze to the upside? No, there's squeezes to the downside too, so you have to be careful about that. Okay, but we're in this little range right here. But so this is kind of what I call a zombie state, just a bunch of small candles, really not a lot of movement relatively speaking. Now this is what's kind of scary and exciting at the same time. Really bottoming tails at the top, kind of showing a lot of support and buyers stepping in. And here is the money line right here. I really like to see the money line formed on the bottom candle, showing a lot of momentum. It did come back up to it and got rejected a little bit here. But there's still a lot of buying pressure. I would really, really like to see a blue day tomorrow and get over this money line here. That'd be a really good sign for HSDT. Overall, we are still below the 25 EMA. It keeps getting rejected off of it. I basically use this for a sign of when to get in. I want it above the 25 EMA, and I want the EMA to go up. I don't use it really for support and resistance, even though I just said it got rejected here. I use it just for quick reference. If the moving averages are going up, I'm long. If they're going down, I'm short. That's just the way it is. That's a rule that I follow. I think it's a really, really good rule to follow. It keeps you out of trouble. And right here, so this is a big deal right here. If we could get above, especially the 25 EMA here, and make a move up and getting the moving average to start breaking to the north side, that would be a really, really good sign for HSDT. Too early to tell. With the actual deviations on the chart, we broke the average price here, and now we hit the first deviation. So, and we're basically doing that going sideways. So, that's a good sign that we broke, the average price, and now we broke the first deviation. We could, start to come up to hit the second, or the third. It has a history of getting up there. What's a little concerning is it just about hit it right here. So now we came all the way back down a whole deviation, so we'll see what happens if we're going to break to the north side or we squeeze to the south side. SPCB, why for some reason I can't find the ticker here. There we go. So same with the SPCB, we break over the average price deviation line here. We are getting starting to get a squeeze here also on the weekly deviations. Here's the range where it's just bouncing back and forth. It comes up, gets rejected, goes down, gets rejected, up a little bit, gets rejected, down below it, gets rejected, comes back up. gets rejected again, big move down, gets rejected, and now we're way up here. Does that mean that, yep, we're going up? Nope, it could just come right back down into this consolidation area very easily. We did get over the third sigma or deviation right here. So there is still a possibility of making it to a run. There's around a 85% chance it doesn't break this area, but if it does, it definitely has a chance to get up here where it's around 99% of the time it won't break that. If we go by those deviations, the weekly deviations, now that they're going to be moving a lot slower, so it could take a long time, but we could be reaching these levels also, or again, it definitely could come back down and just retrace back into this consolidation area. So we'll be able to see in the next couple days what happens. If we 2 red days, then most likely we're coming back down into this area. If we have even just one more green day here, we that's the sign that we could be working our way towards this deviation. First, we have to break this one, 0.4801. We get above that one, and then most likely we'll have a retesting of it, and then it likes to move to the next deviation. So that's what I have for SPCB. A new one here, the reason why I have it on the chart is UUUU. It sounds like some crazy weird foreign song or something. But these are, they look like butterflies. These are patterns based on Fibonacci levels. They're called harmonic patterns. This one right here is a crab. If it's red, it's bearish. So it comes up, fills, and then here's the target lines for them, right? And look, it darn near hit the third target right here. These big boxes are reversal areas. So you wait for it to break. Traditionally, you wait for it to break and then retest the area, which this did, and then boom. Came back up, came down, up, came down, and this is since it's not colored, this is the foreseen pattern right here, and it's following along it quite well. Now you can be risky and play it from here up to 895. So that's why I brought it up. Now the pattern can break and just go sideways and everything, and then this actually will disappear. It's called repainting. It will just go away. All right. This one finished and did really well. The bearish ones, I find, especially in the bearish market, they do quite well. All right. So I would not be surprised to see this go from 730 up to 898. And again, it's called playing an unfinished pattern. So it's a little risky because it could just disappear. This could go down here. But again, these patterns UUUU likes to fill the patterns versus break them. So I was just throwing that out there. If you guys wanted to put a date night in or something like that and see if it runs from 734 to 891, that's a nice chunk of change. So I thought I'd throw that out there. ILESS, good old ILUS. Here we are. I've been waiting since, when was that? December? September? October, November, I'm sorry. And I got out, and here's the downtrend line. If I'm going to do anything against the flow, I'm going to scalp. Okay, came up here, got rejected. Came here, I put a secondary one on here, got rejected. It kind of straddled, and then it finally broke, and then we stayed down below. So you only want to scalp when you're under a major downtrend line. Well, now finally, here's the line, we broke it. Okay, a lot of times it breaks and goes horizontal. Nothing wrong with that. It's just consolidating right here. Here's the consolidation area. Came down close to it, came back up into it, and now it really came down. Now it's just working its way back in. I got in at 0673 right here. Not much at all, but just for a little fun. What I'm waiting for, again, we're in this downtrend right here. So I'm going to scalp this up. There is a bearish or a bullish pattern. This is blue. And so this square here is the reversal area, and it reversed. Now, usually what you do is you wait for it to break, and then traditionally it tries to come back down into it and then takes off. Okay, so I'm kind of playing it according to the pattern and the consolidation area or the range. Usually range, the breakouts fail, believe it or not, usually when it's in a range pattern. So I was playing this failed break. I waited. I didn't get in down here because it could have kept coming down. I waited for confirmation candle. I got in, and I'm playing it at least up to 0784. That'd be the first target. The second target is 089, and the third target is 1153. So that'd be a nice chunk of change. Most likely, if it gets past the first target, I'll probably add a little bit. Here, once we get here, I will probably start tightening my stop loss, and maybe put a 2% stop loss on or something like that, and then run it up to here, and then I'll really tighten the stop loss and see what happens. If that does happen, obviously, if it gets to the third one, it's going to break the downtrend pattern, and then most likely I will wait to see where we have a dip, and if we start coming back up again, then we're setting up a higher high and a higher low, and it's finally, I could finally say that we are somewhat in the beginning of getting through a stage 1 into a stage 2 pattern for ILESS, which would be more of a long-term type of a run, because it would be coming up here, and then a retracement, and then something like that, and then it would go off the charts, something like that. That would be really nice. But here's really the overall. This is the stage 1 area right here. Okay, so all this big run, we're still in stage 1, not necessarily in stage 2, right? This is stage 1, that's stage 2, this is stage 3, that's stage 4, and then stage 1, 2, 3, 4. Okay, so that's what we're looking at with ILUS. SPRC, a lot of talk about SPRC, and here we have again consolidation. We're definitely in a big downtrend here. I have, well, let's see, I should probably put this is the primary downtrend line right here. We're still under the downtrend. We peaked above it, and then we came back down below it. So again, failed breakout, comes back into consolidation area. For me personally, I with that big topping tail like that, it's usually a sign it's coming back down. Okay, these are resistance areas: 112, 119. I don't know what that is. 129, 133, 146. I guess 146, it got up to 155. Okay, I was off by 9 cents. I'm sorry. But if you notice, look at that right here. Boom, right over here. So topping tails, bottoming tails matter for resistance and everything. But usually you wait for the a move and then coming down. That would be your resistance here. Obviously resistance. This is already in the beginning of a downtrend, so that's not really resistance, and so we have support right here, and then really this is the range. It did break, came back down under, so it's too bad. If we should have held 146, but we didn't. That would have been a sign that maybe we were moving up to possibly 161, 180. If we broke 180, most likely we'd, right here, so 203 and 219 areas. Those are things you might want to remember, targets you might want to remember. But for right now, I'm just scalping this until we're over this downtrend line right here. Okay, and then after we break that, then we can start thinking about a stage one reversal type of pattern. So with that, last but not least, the SPY. Look at this craziness here. I probably should. No, we'll go back to the weekly. How's that? Let's see what that. Oh, okay. So here's the weekly. This over here is the profile volume. That shows you where the most volume is, price wise. We kind of did break the shelf, came back down, and really the next biggest shelf volume wise is 341. Think of this as like tree branches. You fall through a tree, you break through that branch, you'll come down to the next one. You break that one, you'll come down to the next biggest one. Now it's pretty good size here. This green line, that's the that has the most volume. And that is 316.15. So we do have. Oh, I'm sorry. Well, just forget about that. This is the range. Basically, right here is where the most volume is, at 474 right now. No, I take that back. That's the range. What am I talking about, Ron? I'm trying to talk and think at the same time. 441.26, the big red one. That's with the most volume. This is the high. That's the range low. Okay, so right now it pretty much in the middle of the range, came back up. Now here's what I think, guys. Here's the major downtrend line right here. So as long as we're below this, I'm scalping. So I scalp here, scalp there. I predicted from 479 initially down to the 410 area right here, 412. And then I predicted it to drop down to 460. From 466, whatever, I predicted 430, which it did. If you notice, it's just in this wedge right here, okay? And this is the pandemic low, right below this sigma. So what I did is I drew a parallel line along that sigma all the way up. Okay, it got close to the pandemic low right here. Came back up. Now, if we would have broke this, then then we could have been going, probably up to 494, but we got rejected. We definitely could just retest it, but what I did is see this line, how it goes through that movement here, and then I just drew a parallel line with that, along with where it got rejected right here. And now this line right here, okay, I parallel with this line, or I parallel this line with that line, with that movement. And then what that does is it gives me an idea, and if you look, they cross right on that green line right there. Okay, so we'll zoom in here. So what I'm looking for, and what I think actually is it's going to be coming down. It's going to be coming down to around 380, somewhere in this area right here. Okay, here's the pandemic low. Okay, again, it didn't reach here, so I'm thinking it's going to reach right here. Now I drew this green line on a smaller deviation that parallels with that deviation according to where this was on that lesser timesheet. And it just everything look where it crosses right down right here, right off of this support line, and just above the major pandemic low line right here, which is it didn't reach right here. So I see it coming down here. It just makes sense. I mean, it's just here it is. It's just following this nice pattern right here, and now it's off the chart, but this is a descending wedge, which is bullish. Okay, now 78% of the time it breaks with according to the wedge. So I'm then thinking, maybe it will retest and then finally break, retest again, and then this is called like meeting the point. So the point is off the screen, but it'd come back down, and then we'd bust out. So I still think we're in a downtrend for quite a while yet. This is the pattern that I see happening. Now, yep, it definitely could come here and then break through. And so what this is just a rejection and then a retest and then the breakthrough. So this could happen, but I know election time's coming up and everything, and sometimes supposedly markets are falsely supported depending on what's going on and who wants to be supported, but I'm just going with the flow. It's coming down. I'm going to continue to short as long as we stay below this line, and I'm just going to scalp in certain legs right here. Another thing that makes me think that is a very, very good indication of what kind of what kind of condition we are on, bearish or bullish, is I bring up the 180-day 30-minute chart. Connor Polifrone uses this, and I highly recommend him also. He's an outstanding technical analyst, and he uses a 50-day, and so do I, a 50 SMA and the 10 SMA. Okay, when the 10 is above the 50, you're bullish. When it's, well, for me, technically, when they're going sideways, I don't mess with it. This is just begging you to lose money right here. It's being really, really choppy. But what you can do is, again, it's ranging. So you form a range right here. Here's a false breakout right there. Oops, I got the squares on. That's fine. But see, it comes up here. Breakout, nope, gets rejected, stays in here. Little breakout, nope, gets rejected, and then bam. Okay. Why? Look at the 10 EMA. It crossed under the 50. When the 10 EMA is under the 50, you go short. Okay. That's just the way it is. Now, here we are again. We're consolidating. I probably should have made that a little bit bigger. So what's going to happen? Me personally, again, from what I saw on the regular chart, is we're going to break to the south side, and we'll break through here, and we'll continue downward. So consolidation down, consolidation, and I still think we're going to go down. We're still under now. Yes, the 10 EMA is coming. But if you notice, it hasn't kissed it yet. Usually after breaks out, it usually goes away from it and comes and kisses it, and then that's when you get your big move. Okay, and this went way far away from it. Now it's coming back, and then I think it's going to kiss it, and then it's really, again, I think we're going to. What did I say? The 360 something, right? I believe. Right here, 380. Sorry. So this is again the weekly. What we were on was the 4-hour or the 30-minute, 180 days. So all that consolidation is right here. Okay. So we're consolidating, and then I think we're gonna continue downward. That's what I have. Looking at the SPY, that's just what I believe. But I'm just an old man in a dark room upstairs looking at 3 monitors, and take it for what it is. I'm not a financial consultant, but this is what I think is going to be happening with the SPY, and I hope you guys had a really good day trading. We had a really good time in Moon Markets Discord, and having fun and making money. And with that said, guys, take care, and we will see you tomorrow night.